All right. All right. We're going to get things started. Jen, is there a way you can unmute yourself? Maybe start off with a little conversation about the week. If you can. If you can't, that's fine. Hi, Judy. Good to see you. Good to see you. All right. Well, thank you all for joining. I'm going to riff for a little bit here at the start because people usually start to come in a little bit later. About 4:15, I'm going to do market update and such. But the big news, of course, this week is the Ethereum merge in the cryptocurrency space. I had the pleasure of going to a party, a barbecue, where we celebrated that at a local Atlanta crypto meetup last night. I totally stole and plagiarized my friend's PowerPoint slide because he did a very good job of explaining it, helped me understand what it meant, and I'm going to regurgitate that and try to help other people know what it means if you are so inclined to know. I also want to talk about what I gave a presentation on. I'll go ahead and record that as part of the live stream to make it into an independent video to put on my channel for later, talking about the Biden administration's climate change and crypto assets report that they put out last week. And that's going to be potentially big for Bitcoin, not so much Ethereum anymore, because it doesn't use energy intensive consensus mechanisms, i.e., proof of work. So that is what I want to talk about today, as well as market update. Next week is FOMC. Not much happened in stocks except they just kind of crept down. I think that they are, if I had to put a personification on stocks, they're looking for another rate increase probably coming next week because inflation was a little bit higher. That was the big news this week. Inflation crept up just a little bit, depending on which news source you looked at. It was good or bad, but people are expecting rates to go up, and that means bearish in this current market condition. So we will take everything a step at a time and start to look at some stuff here in just a minute. Welcome. I see some people filtering in, some regular friends of mine. Hey, Stone Pilot. And yeah, if you guys got questions to look at over the course of the live stream, just let me know. Just post it in the chat. And I'm here to talk with you guys. I'm here to talk about what you guys want to look at because I could riff forever. Let me pull up my notes to that end. All right. So to start off, Jen, you got something to look at, or Stone Pilot? What you been looking at this week? I'm going to give another minute, then we'll do the market update, and then I'll jump into the topics for today. This is going to be a good one. I'm going to present some good informative stuff today. All right. All right. Well, without further ado, I have in my notes here the gold silver narrative. Yeah, we'll get to that. We'll get to that. All right. Okay. Well, let's start off by looking at the stock market indexes represented by the futures. Oh, what an interesting close of the day here. All right, I've got Ichimoku up, but let's clean this up a little bit. Let's just look at this at its base level. So we're going to look at stocks first. Then let's look at crypto because, as I said, we're going to talk about Ethereum today. And then we'll look at some things like gold and silver. And let's take a look. So, all right. Today's price action was interesting. Where do we have the open here? The open was quite volatile starting here. Things went down at first, and it looks like we're going to close up a little bit. This is the ES, which is the S&P 500 futures. I use this to gauge the stock market. A lot of people use SPY. This is a good gauge of it. So on the daily chart, if I overlay Ichimoku in the morning, one of the things that I always look for in Ichimoku is a general sense of the trend. So when price starts to get below the cloud, like it is doing over Thursday and then today, then I started to look for it potentially to be bearish. It's just that simple. But there's one extra step that has to happen. Momentum, the Chikou, or the lagging span, as they sometimes call it, that needs to come out as well. Now, what was interesting when we had this bar, I draw this. Well, imagine that this red bar was filled, which brought the Chical, the purple line, down here. And so if this had closed down below about 38.40, if we had closed the day at about 38.40 on the ES, that would have been bearish. That means that this bear trend that we've been in for the better part of 2022, starting all the way back here in January, would have continued following this pullback that we saw in August. So next week is going to be interesting. I always say that. Every week interests me. This coming week, what I imagine is going to happen is we're probably going to hang around Monday or Tuesday waiting for that Wednesday FOMC. I'll probably do a stream on that day. And somewhere around Wednesday, momentum's still going to be in the cloud. Probably going to just kind of hang around this 3,800, 3,900 level. And then once they make a decision if they're going to raise interest rates or not, I think we'll see the market move. Could happen before that, could happen after. That's what I'm going to be looking for coming into next week. So it's on the precipice, you could say, of resuming the bear trend and trying to retest these lows back here around the 38.60. We had a little bit of a fake out. What was it? The 13th? Yeah, the 13th was Tuesday of this week. Let's go down a little bit lower. So yeah, Tuesday of this week, was that the 13th? This was the inflation print, I do believe. Yeah, it was 8:30 in the morning. Market had been creeping up, making everyone think that maybe we're going to go up. If you recall from my last week's stream, I was able to capture this one on the day after Labor Day. This spike on the 6th of September, right at the open, both the S&P 500 and the NASDAQ gave us the spike down here that told us that this bull trend was going to start. I captured about this much because it was the halfway point of the move down from August to here. That was a really nice trade. And then I was out. And then this happened and man, gave up all those gains and then made a new low for the week. All based on that inflation print of 8.3 year over year. That implies that the Fed is going to continue raising rates come Wednesday. And so that's bearish for the markets, whether it's stocks or crypto. Everything risk related is looking at interest rates because I guess the narrative is that everything got so used to that easy printed money that nothing can generate any returns without the Fed money printer being on. I don't think that's true, but that seems to be the narrative going into this bear market. So all eyes, no matter if it's stocks or cryptocurrency, are going to be on that Fed meeting. You've already seen it here with the inflation print. This is the market assuming and pricing in a rate increase. Now, what could happen? What could happen on Wednesday is, let's say that we, for some reason, don't get a rate increase. Well, then you can almost see it as like a beach ball held underwater because all this selling pressure has pushed it down. It's highly buoyant, and then boom. I would definitely look to see a pop. Maybe come back and try to resume where we were on Tuesday of this week, back over 4,000, maybe around 4,100, if they don't raise rates. But that's just my speculation. I'll be looking at that. So that's going to be an interesting Wednesday, and I'm going to do a stream for that. I'll do a Wednesday. That's Wednesday at 2 p.m. In times past, those have been some very good trading opportunities. So I'll definitely be around for that. I highly recommend, if you can, to be in front of the screen and look for some sort of volatility spike. But yeah. All right. So S&P 500, NASDAQ, both of them look basically the same. Look at that. This almost got momentum out of the cloud right here. But now we're still not quite bearish just yet. If anything, This right here is interesting. Let's see. Hold on. Let's see what the numbers are. We're not closed for the day on futures. Let's bring up QQQ. I want to see what the price action on that. All right. So yeah, that opened below there. So again, that's still, ooh, wow, that's close. I know these are just tea leaves reading, but all right. So that Chicao closed at 289.21, and the bottom of the cloud, what I used to is 289.05. Close right inside the cloud. That's pretty cool. That's pretty cool. And I've already got the 50% lined up right here. Where did I draw that from? Hang on. Uno momento. Okay. So where we pegged this morning, hang on. Let me fix this. Weeks. Okay. Clean this up. So if you notice, I got a 50% retracement here. That's because the NASDAQ is holding the proper 50% level. Look at this. Oh, this is the QQQ. Okay. Hold on. Let me fix this. Let me make sure this is exact. This stuff is really cool. This stuff is, when things line up this clearly, it's really cool. Okay. So here's the top. That's November 2021. And then the bottom, the COVID low. All right. So this is the halfway point of the trend. As you can see, we came here first. We tested it back in May of this year, breached a little below it down here, had this little rise up in August to here, and then the NASDAQ came down to peg in the line. The proper line is 286.82. Let's go to the 1 hour today. So this is the 1 hour. Kind of rounded off, got a little below it, and then closed inside that 50%. Just based on that, I got to say this thing is holding bullish. Now, anything can change, but if I'm going to make a speculation, I'm going to say that this is actually still bullish in the long term, from all the way back from COVID low to the big trend from the COVID low. This thing is still holding its line in the sand at 50% level. Now, if we start to break it, then I'm going to come on here 1 week, because this is a weekly chart. I can update you guys periodic with this. When this thing comes down and say it starts to break this June low, that scary June that we had, that's when you can panic if you want. Not until then. It's still trying to hold that support. It's trying to be held up. It's trying. Now I know individual stocks are definitely giving up their ground, but the tech heavy growth high risk market of the QQQ, the NASDAQ, is still trying to hold. It's trying its best despite all the carnage this week. So interesting. All right, that's enough about stocks. Let's take a look at Bitcoin. Bitcoin is still hanging out at the lows of this range. Earlier in the week, starting last weekend, there was this pump here on September the 9th. What day of the week was that? That was Friday of last week. And that carried on through the weekend, and it just kind of petered out. It just went nowhere. In fact, again, going back to this basic Ichimoku analysis, price came up here in August, held the top of the cloud, stayed bearish, got back down here, and started scaring some people here in the beginning of September. It was right there ready to go down, but then you had this pump. And I think it gave a lot of people hope. But now that's all the selling that you got. And now once again, we're back here at these lows. That's not bullish. And we're going to talk about Ethereum here in just a minute. We're going to talk about the merge and what it means fundamentally, technically, because I think it's very valuable to know. I learned it, so I want to share with you guys. But as far as price action goes, like there's an adage. I'm going to butcher it. I'll just make it my own. In a bull market, good news yeets it. Straight up, rocket. Bad news in a bull market, shrugs it off. Sometimes it even goes up. That's a bull market. Things just go up. It doesn't care. It doesn't matter what happens. Doesn't matter what the news is. Market just goes up. That is a bull market. Everyone's a winner. Everyone's a genius. In a bear market, bad news will absolutely tank. the market. And good news, will get shrugged off. What that means to Ethereum, and we're looking at Ethereum now here. This merge, big news. A lot of changes. Changed the whole way that Ethereum works, essentially. Literally, it changed the consensus mechanism. It no longer uses proof of work. It now uses proof of stake. That's big. That's huge for the evolution of Ethereum. People have been looking at this to happen since 2015. It's been 6 months away for 7 years. Finally, it happened. And you would think it would be good news. Now, in any kind of news event, the adage goes, buy the rumor, sell the news. So if you were buying up till the merge point, you'd be in pretty good shape. I wouldn't have disagreed with you. Problem is, this is the run up to the merge right here. Okay. It's not much. I mean, what did you get? Maybe about 16% in crypto world. And it really didn't fundamentally change the trend. And then when the merge happened, you still got the sell the news. It happened. It went down. Now, if the merge had failed, that would have been bad news. That would have been catastrophic for price. But since the news was good in a bear market, it just went, and just kind of crept on back down. So what I'm trying to say here is crypto is still in a bear market. It is still in a bear market cycle. And I've seen multiple ones of these in the decade plus that I've been following trading cryptocurrency. People ask me, when's it going to end? When is it going to? Well, I'll tell you when you stop asking me. No, you can ask me. I'm just saying, when people lose interest, when people get so frustrated, when you no longer have people thinking that crypto is a good investment, that is the bottom. Price is reflective of people's emotions. And so as long as this thing is just kind of hanging out, as long as there's still some bullishness, as long as there's still some hope and optimism, that's going to be reflected in the price. Only when there is no hope and there's fear and panic, like you saw in June with the crash of Terra and Celsius and all those sort of centralized services, centralized exchanges and Terra, only when you have that happen, then you get this rundown, and because people are panicking, oh no, it's going to die, blah, blah, blah. Got all the way down to 1,000 Ethereum. I don't know if we have another panic coming. It's funny, the Warren Buffett quote, a bear market, I'm butchering it, but the premise is, in a bear market, it's like the tide going out and you see who's swimming naked. And there was a lot of centralized exchanges like Celsius that were swimming naked. They didn't have enough on their books to make themselves solvent. In fact, there's some news this week that they're trying to restructure their business in some way to charge fees for their services. I think it's really just this is my opinion, I think it's just a way for them to get creditors to give them some money so they can stay afloat. I don't know if it's going to work or not. Not many people really want to invest in crypto now, and that's reflected in the price. So Bitcoin and Ethereum, Bitcoin is still bearish, and it's teetering in this consolidation pattern right here from 19,000 roughly up to about 24,000, although it held at about 23,000. This is the range that it's in. Now, where it breaks out of that range is going to be important, but I would not encourage anyone to start looking at this until it gets in a full confirmed bullish trend. It's interesting here about what happened over the last week in this run up. I think a lot of people got really, really excited. I read a lot of Bitcoin chats, Bitcoin maxi chats, and they love to get excited when finally they see it tick up a few percent. But if you just use simple analytics, not chain analysis, but simple technical analysis, and I've got videos about how using Ichimoku is superior to even HODL. When this move happened, a lot of people were buying it here thinking, okay, this is it. Can't miss it. FOMO. But price did not even get on the bullish side of the cloud, nor did the momentum. You had neither indicator telling you that this thing was bullish. And now you're back down where this started 2 weeks ago in this malaise of 20K. Ethereum, it had a reason to try to go bullish back in August, but now it's again teetering on going bearish. If Ethereum drops below, let's say 1,300, that's going to be an official bear trend on Ethereum. Bitcoin's already in a bear trend, and Ethereum is teetering on the edge of it. So keep an eye on it, but the smartest way, the safest way, is to wait for confirmation that this trend has started to reverse in the other direction. And I'll post about it when it happens. Promise you. One more. My favorite, Monero, is holding. And it's like every other cryptocurrency. It's also teetering on the precipice. If Monero gets into 135 range, that's going to be bearish for it as well. But I like the use case of Monero. I like the use case of Ethereum. And I like Bitcoin because it's Bitcoin. Those are the three that I care about. If you got something to look at, if you can sell me on some project and why it's going to moon, or look, I'm looking for use cases now. Okay, I'm over this whole moon. I never bought any Dogecoin. I did short Dogecoin and I did short Shiba Inu because those were pretty obvious. Obvious. I'm sorry to the people that in my comments that got really mad when I posted about it, but look, like, going to the moon is not a use case, okay? A fixed supply monetary system, Bitcoin, that is a use case. Smart contracts, that is a use case, Ethereum. Privacy, that is a use case, Monero. It's just like a company that makes widgets or provides a service. People want to own these things that generate wealth. Things happen, things are built, people like the service. That's how wealth is generated. Wealth is not generated just by existing and everyone else buying it at higher prices. It happens for a while, but that doesn't have any sustenance to it. So I follow Solana because friends of mine think it's going to be a better layer one than Ethereum, has lower fees. But it's interesting, the fee system of Ethereum. And we're going to talk about that here in just a second. But let me pause and encourage you guys to post anything you want to look at in the chat, stocks, crypto, or any topics that you want to discuss, because I'm here to talk to you guys here on this Friday. Feeling pretty good. Thanks for the compliment on the beard. All right. Stone Pilot, I think a minute ago you talked about RCL, Royal Caribbean. What's going on with this? Okay. So on the daily, the trend has begun to turn up. What I would like to see here is momentum get on the daily side of the cloud here on RCL. But it looks like it started to turn up a little bit from July, just like everything else. On the weekly, what you need to watch for is what happens when it comes up to the halfway point of this downtrend, 59.39 right here. That would be where I would look at this run up to start to find some resistance. So start to look around here and make sure that this thing breaks it solidly, pulls back, maybe does a retest, and then goes higher. That's what I would look at on RCL. All right. Let's talk about gold and silver real quick, because I know I get a lot of questions about gold and silver. A lot of people like gold and silver. They have for thousands of years, maybe even more, tens of thousands. How long have they been gold? I don't know. I don't know how long gold's been used for money, but a lot of people look at this. It is a store of value. It is a store of value, just like people want to do with Bitcoin. But people ask me, what do you think is going to happen with it? Well, I'll tell you this. We've got 8.3% year over year inflation. The whole use case for gold and silver that I've been told by the Peter Schiffs of the world is they are inflating away everyone's wealth. And you have to buy these precious metals because they're the only thing that will keep value. On earlier this week, when we had that inflation print, it was Tuesday. Stocks went down. Crypto went down. And even gold went down. So if the narrative is that gold is a hedge against inflation, then why does it go down when inflation goes up? Something's not right. Either something's wrong with the narrative, or, as some people tell me, something's wrong with the market and it's manipulated or something. The lizard people are pushing the price down because reasons. Look, I don't know what the lizard people are doing. They're not going to call me up and tell me what they're doing. But this narrative that as inflation goes up, so will gold and silver, it's just not working. It may, but you need to find another reason, because I'm not buying it anymore. I never did buy it. So funny this year. The story of the year is basically this. Bitcoin, S&P 500, gold, all year over year down, and one of the best performing asset classes of 2022 has been the US dollar. Now that's compared to every other currency. But if you have cash in your bank that you haven't bought anything with, you essentially can buy more Bitcoin, you can buy more gold, you can buy more S&P 500, any stocks with your dollars. So your dollars are worth more because all the prices relative to dollars of Bitcoin, stocks, gold are all cheaper. But that's not what we heard in 2021. 2021 was, oh, they're going to inflate away all our savings and everything like that. Well, you got to make your own narratives. And that brings up a very interesting phrase that I heard this week at a fireside chat about DeFi. Let me share with you guys this narrative. This is going to be something I'm going to use. This very simple term. It's what you see on YouTube, other than my channel, but what you see on the channels that actually get more than 100 views. That would be borrowed conviction. What is borrowed conviction? Think about it. It's what you think it sounds. Basically, people don't know what to do. They don't know what to buy. They don't know what to invest in. So what do? They go find someone that speaks confidently on the internet, and they say like, this reason. And basically, they take that person's conviction and they make it their own. So they borrow it from them. And that's what they use for their decision. But then when things go wrong, what are you left with? You don't have the conviction on that instrument that you bought anymore because you got it from someone else. You got to come up with your own conviction. And you know what? If you don't know what to buy, if you don't know what to invest in, that's okay. Because this year, if you had done nothing and you just held dollars, it's worth more. That's proof that sometimes the best thing to do is nothing. Nothing. If you had just bought Bitcoin and hodled it for years, done nothing with it, you'd be a lot better if you tried to do some leverage trading. But people seek this borrowed conviction on people that yell the loudest and speak the most authoritatively. I try to be humble. I try to tell you that this year's been hard for me. I try to tell you that I take losses all the time. And I try to tell people not to follow what I say without doing your own research. Because I want everyone to think for themselves, because that's the only way that you're going to have your own conviction. And so I heard this phrase this week, and I'm going to start talking about it, throw some shade against people when they try to give other people borrowed conviction. Because I tell you something, that sells. That sells on YouTube for sure. People look, buy this stock now. This stock is going to moon. But what you end up being is exit liquidity for people that are already owning it. Now, I will sometimes talk my book. I will talk about something I've already bought. I do, in fact, do that. But I try to be as open and forthcoming as I can. And to that note, as far as conviction goes, I don't really have any particular conviction right now in the summer. I'm watching. But that's sort of the namaste that I've kind of said to myself, like, you know what? Nothing is really sticking out at me. I'm throwing some bait into the market, as it were, but nothing's really sticking out at me as something I want to do. I don't want to buy anything right now. Crypto's down. I know when it becomes bullish, I'll buy it. Stocks are down. I'm looking for individual stocks for setups. BMY, Bristol Myers. Again, this is not my conviction, but it was just a simple setup that occurred on August the 30th. And just so happened I was in this from August the 30th up till this announcement of some, I think, psoriasis drug trial. And now I've got this position I've taken profit in. And I like this a lot because this pulled back to the November 2021 low to the high of June. And then boom, right here at 66.72. Sometimes, man, this has been the only winner I've had in the last few months, but everything came together. Everything came together, and this fits all my rules. And I don't know what Bristol Myers Squibb's going to do. I know what they're not going to do. They're not going to go out of business. And so now I took a little bit of profit, and now I own Bristol Myers Squibb, and I'm going to hold on to it for the rest of the year or even longer, and sell calls against it, covered calls, because it's a position that I've established here this summer when the market was bearish. And who knows, it could be one that a few months from now, pharmaceuticals, healthcare could be flying high. And I need to do a sector rotation update at some point. But don't take my conviction. I'm already in this. It could have lost. I mean, I got into UPS around the same time that I got into BMY. I even talked about this on the live stream, when I got into it, and it stopped me out. Oh, this is a great example too, right here. All right, so UPS, again, this is why if I would have told you guys, I know I did it. I know I've got it marked up here from a past live stream. And I talked about, okay, you had a post earnings rally, it pulled back to the 50%, and I bought it. Okay. Don't take my word for it. Because what had happened was it stopped me out right here. And of course, it came back up. And this happens all the time. This happens all the time in trading. All right, let's just start over. Let's start over. Okay. This is a good teachable moment. All right. So 30-minute chart. September the 1st. I come in and 10 a.m., do my scan, find my morning spikes. Looks something like this. You got a 160% ATR here. What does that mean? Join the Discord. I'll tell you. You can read it there. By the way, plug for the Discord is free. I don't charge people. I just want to talk to people and get ideas from people. Share my own. Link below. Post-earnings rally came after the earnings of UPS. Came down to the 50% right here around this inflection point right here where price started to kind of hang around. Great setup. Great setup. Go into it, holds around, and I went for a little bit more profit. Didn't hit my target. Probably should have grabbed it here for reasons. Hindsight 2020. All right. Instead, comes back down for a loss. So put that in my journal, learn from it. The lesson learned is here was my 3-to-1. Here was the 50% from the leg down. Yeah, when you have a big gap up like that, take some profit. Don't be greedy. But anyway, got punished. And after getting stopped out, this happened. It actually came up to about where you'll see that my target is right there. Okay. So this has, and for a lot of people, will trick them. Things like this happen and they tell you, oh, me having a stop was the mistake. No, having the stop was not the mistake. Because even if it came back, I guarantee you eventually one of these is just going to keep on going past your stop. You just got to take the loss. The problem was not that I had to stop here. The problem was that I didn't take profit on swing trade in a bear market when I could. Okay. And then it hangs out. And let's say that I had held on to it and it didn't even hit my target up there. Now it starts to breaking down. Now I'm like, oh, okay. All right. Well, I'll just wait for this thing to come back. Let me just wait for this thing to come back. Surely it's going to come back, right? Okay. Let me hang on to it. Ooh. Ouch. When's this thing going to come back? Oh man. Oof. You see why it's good to have a stop? That's why you have a stop. And see, even though this was a loss back here, at least it's not down here. It sucks. It sucks to take losses, but you don't want to be in this kind of loss. So I'm glad to be out of UPS. I told my friend who works for UPS, I said, hey, man, I bought UPS the other day. And he's like, oh, yeah, high five. And then I sold it the next day when it stopped me out. He was like, he took his hand out. So, all right, let's check the chats here. Okay. All right. Talked about my things. Okay. We got some time left. Let's talk about what I promised with the Ethereum. And we're going to go through this pretty quick. I'm going to try to make it layman's as possible. I totally stole this from a friend of mine, and I'm going to break through some of the key components here. Let's see. All right. So the merge happened on, what was it? Was it 9/13 or 9/12? Okay. All right, Dr. Chelsea, I'll look at Nvidia. Real quick about Nvidia, it just keeps making lower lows. It reached a 52-week low this week. With Nvidia, if you like the company, you just forget that you own the stock. I mean, you can go and take your cash out, but you need if you need to either with Nvidia, you need to say, I can take this money I have in Nvidia and I can put it into something that's going to make me more money, or you forget that you own it. It's in the valley of risk. I don't even need to look at the chart because I own Nvidia and I own enough where I can just be like, okay, I'm not going to look at it for a year or two because that's how long it's probably going to take to come back on you. Sorry. I got the notification that it got a 52-week low, and I already knew. Well, okay, I'll look at it real quick because it is again a teachable moment. I've been talking about this for a while too. Nvidia. So basically, here's the weekly chart of Nvidia. So, and I've talked about this many times in my live streams. When you have something goes up, and it comes back down to its 50% retracement level, that's where it should hold. Now, in Nvidia's case, what it did when it came down to its 50% level of the big trend from COVID low up to high, which everything is based on, came down and it held it briefly for a few weeks there in April of this year, tried to get above it, failed. I mean, that right there, I'm not going to say you could know that price action was the end because that would have happened intra-week. But when you get these lows here and then it pulls back to that 195.82, holds it again, and then proceeds to make a lower low, it's done. It's done. And I know hindsight, but that's what I look for right here. I mean, I've talked about Zillow before. I'm not going to jump into it in this live stream, but where it stopped me out of a big weekly trend, pulled back, held that support as resistance, and then made a new low. Get out. And wouldn't you rather be out of Nvidia at 140 as opposed to 130? I mean, it's giving you two opportunities here to get out. At this point, I don't know where the bottom is. It could be here. It could be 120. It could be here. It could be 81. You just don't know. Now, you can try to look and see what happens at this level. Maybe it will drop below it, and then you can get out now that it's confirmed it, or maybe it'll bounce from this level. But the next level to really look at is 120. It's a nice little inflection point. It's the low from March of 2021. So the highest probability is that Nvidia, even though it made a low today, it's probably going to go lower down to about 120. I mean, this is a bear trend. It's not stopping. So, you could start a position here. You could throw something at it, but try to be smart about it. Take a look around 120. I thought you were already in it. So, you can do what you want to do, but 120 is where I would start to get interested, basically. All right. Now, let's talk about Ethereum. 1 second. Let me get that back up. Where are we? Okay. Go through this. So it happened. I like this little image that he came up with. The pandas or whatever. There was Ethereum 1, Ethereum 2, and they merged. That was what it was. And the new merge is basically high level. Instead of using lots and lots of processing power to maintain the network, now the network is maintained by people that have Ethereum locked away and are doing the processing of the transaction. And then they get paid tips, as well as they get paid tips to keep that going, which is what they get as their staking fee. That's how they earn money and encourages people to run the network. It doesn't make Ethereum faster. It doesn't make it more scalable. But it just changes it from proof of work, proof of stake, along with some other little details that actually above my pay grade. But that's basically what happened. Now, this was an interesting thing that I learned from his presentation, and this is the let me move myself up here. The old model was if you made a transaction in Ethereum, you would pay the units versus times the price, the gas price. But now what they have is a new formula for the transactions, which is a gas units times the base fee plus the priority fee. Now, the priority fee you can put in yourself. And the priority fee is what you can pay a little bit extra to have yours transaction confirmed faster. The staking people get that money. The base fee is burned. In other words, it's destroyed. In other words, whenever if you move $100 worth of Ethereum, I'm throwing this out of my head, and the fee is a total of $1. That's 50 cents base fee, 50 cents priority fee. Your 100 moves. You pay the $1, so you're moving 101. 50 cents of it goes into nothing, gets destroyed. In other words, decreases the amount of Ethereum in supply, deflationary. And the priority fee, the other 50 cents, goes to the stakers to encourage them to keep doing what they're doing, which is processing transactions. That's the really interesting change. It's and my friend summarized it pretty well. Yeah, here's a little diagram of what happens there, but that's the basics. Bitcoin, the way it goes up in value is if people don't sell it. It becomes deflationary when people take Bitcoin out of circulation. Maybe you delete a wallet on a SSD drive several years ago, like I did, and lose a bunch of Bitcoin. That's deflationary because that Bitcoin is no longer in the world. I cannot access it. Gone. With Ethereum, the supply is actually it's still inflationary. They're still producing more Ethereum, but you actually take Ethereum out of the network by spending it. And so the actual liquid supply of Ethereum is now decreasing slightly. It's not really taking over the inflationary nature of it. The more it's used. So basically Bitcoin, the way you make Bitcoin go up is you don't use it. Ethereum, the way that you make Ethereum goes up is you use it. And that's fantastic. That's great. That's amazing because that means that for people to use Ethereum, it means the value of Ethereum can go up. It's a great concept. That's actually a really good concept. It makes me like Ethereum even more. It really does. So I think that's really cool. Was there any other point? Is it decentralized? We're not going to touch on these, but that was the main point about the merge. It's no longer using very much energy, as much energy as it was. It's down about 99.8% as much energy. And so that is a good thing. That is a good thing. All right. Move myself down here. Okay. Let's see. Nvidia, if it has no bottom, should I short it here? I mean, something like Nvidia is in what I call the valley of risk. It's not that it has no bottom. For somebody that's in it and really frustrated, it has no bottom because you just look at it every day and it just keeps going down. Now, if you don't have a position, you have a lot more mental clarity, basically. You could probably take a short or a long and keep your risk fixed and then trade it objectively. You can do whatever you want, but it has no bottom I'm still in Nvidia. And like I said, I'm frustrated with it too. It's a good company. They're not going to go out of business, but they're just in a bear trend. I mean, what are you going to do? Because the moment that you sell it out of frustration, what's it going to do? It's going to bounce right back because you are the market if you already own it. And so when you give up on it, you are still part of everyone. And when everyone's given up on it, that's the bottom. That's the enigma of trading, basically. So I would look for a setup. I mean, do like I do. Look for a technical setup, whatever you like. All right. Let me give my presentation that I gave last night. Actually, I'm going to take a quick break because before I do that, I want to have a drink of water. I'm going to let you guys look at Ethereum here while I do that. Give me just 1 minute so I can wet my whistle. Be right back. All right, that's the break. So I kind of want to show you guys this. I like my flavored drinks. It's a lot better to just drink water if you're a human being or any other organism. But I like a little bit of flavor in what I drink. And I got to give props to this company for the marketing. This is Liquid Death. Okay. Liquid Death. That sounds cool and amazing and hardcore and everything. It's literally water. It's canned water. They put water in an aluminum can. Why haven't they done that before? Now this is actually flavor. This is actually lime. I wouldn't have, but I went to the Willie Nelson concert a couple of weeks ago, and they were serving. You couldn't buy a bottle of water. There was no bottle. It was no Dasani. They were selling Liquid Death, which is water. Now I guess it's kind of ironic because it's marketing. It's purely marketing. And it's genius because it's what is that? It's Liquid Death. It gets you talking. It gets me talking about it because it's so unique. Exactly. I'm not even getting paid, but. Yeah, I guess you could drown in it. So yeah, it is Liquid Death. So I'm gonna actually try this. Actually, this is the lime version of it. Let's see if it's any good. Probably not gonna have any sweets, but let's see. Oh, that's actually pretty good. That's good. That's good. It's not too fizzy either. Okay. All right. Let's take a look. All right, so I want to talk about this now. I got a little bit of feedback on this from a friend of mine. The friend of mine is a good buddy. He is also a little bit more of a fiscal conservative type, and he told me I asked him for some constructive criticism, and he told me, it was good, very informative, but you got a little too political. Okay, trigger warning. All right. So, politics versus proof of work. This is going to be about the Biden crypto assets and climate report. What am I talking about? Well, let me back up. Okay, back up real quick. I want to take a poll. Keep this in your head. Think about it. Okay. Well, I've already given it away. I should have done that for. All right. So, which of the following represents the greatest existential threat to humanity? So this is from a Twitter poll, which is entirely scientific and completely statistically accurate. Most people think on the internet, and a lot of people in the world, especially the people that elected the Biden administration, that climate change is the greatest existential threat to humanity. In other words, more than disease, more than COVID, more than AI, which I think a lot of tech-savvy people think they watched a lot of Terminator. They think that AI is going to be our end. Nuclear war, people don't really think that anymore. Not since the 60s. I actually, my thing that worries me, keeps me up at night, is not on this list. That'd be natural disaster. I actually think that a volcano is probably the worst threat because that would actually decrease global temperatures immediately and starve every animal on Earth if it was big enough, like it has at multiple points in history. But since that hasn't happened recently, at least since the 1800s, nobody really cares. So now climate change. All right. So that being said, The Biden administration issued an executive order on March the 9th to make a report. And the report is going to be about crypto assets, cryptocurrencies, and how much energy they use, as well as how much greenhouse gases they put into the atmosphere that could hamper efforts to achieve net zero emissions into the future. So reads like a consultant wrote it up for someone. It's actually very informative. If you don't know anything about cryptocurrency and you don't know anything about how it works, it's pretty good. It's like almost like you wrote it for a boomer. They could figure out what this crypto asset shenanigans are. But I'm going to summarize some of the points for y'all, and so that you can see what may be coming down the pipe. So, crypto emissions make up about 140 megatons of carbon dioxide per year, and that's, to put it into perspective, that's greater than all the ships and tankers and barges moving the goods that we use across waterways, across the ocean and everything like that. That's for comparison. What we use to transport goods, that's what crypto asset mining is doing right now, Bitcoin and everything else. In 2021, the U.S. electricity generated from crypto mining, Bitcoin, Ethereum, and they threw in Dogecoin here, generated greenhouse gas emissions at 15 megatons of CO2 per year. 1 year is equivalent to 3 million gas-powered cars. So that's a lot. 3 million cars on the roads is what, in 2021, the same amount of greenhouse gases were released as crypto mining. And then a third of Bitcoin activity is now being done in the United States. So the U.S. electricity consumption is anywhere from 8 to 11 billion kilowatt hours in early 2021, and it's probably gone up for that. And Bitcoin mining alone would probably generate about 21 to 35 megatons of CO2 per year. Now, I don't really have a concept for that myself, but let's just say it's a lot, because we can compare it to, my face is a little getting in the way of things. We can compare that to cars and barges. All right. So here are a couple of the high points from the report. United States is committed to combating the climate crisis and reducing greenhouse gas emissions by 50% by 2030, all while prioritizing environmental justice. Now, I had never heard this word before. Maybe I'm outside of the loop on what the buzzwords are, but environmental justice, that's a new buzzword. First time I saw it in this report. We'll go into a little bit what that means in a bit. Here's a big, scary comment. Crypto assets could hinder broader efforts to achieve net zero carbon pollution. Crypto assets could be threatening. Additionally, demand must avoid the unmanageable impacts. In other words, the demand for the electricity to mine cryptocurrency, it must not be unmanageable. That's what they say. And it must use the most efficient technology possible. What does that mean? They're talking about proof of work versus proof of stake. Broader adoption of crypto assets and the potential introduction of new types of digital assets require action by the federal government to encourage and ensure responsible development. This includes minimizing impacts on local communities, dramatically reducing energy intensity, and powering with clean electricity. So this report says the federal government has to act to bring the energy and carbon production down. The administration should explore executive actions, and Congress might consider legislation to limit or eliminate the use of high energy intensity consensus mechanisms for crypto asset mining. So high energy intensity consensus mechanisms, proof of work. That is what Bitcoin uses. It uses a lot of electricity to confirm that the transactions are valid. All these miners are competing to solve a block, solving a cryptographic puzzle. That takes a lot of computing power. The more people try, the difficulty goes up, the more energy is used. it's a very inefficient way to process anything. In fact, it's designed that way. Bitcoin is designed to use energy. I'm going to touch on that point here in a second of why that's not necessarily a bad thing. So a few people criticize me for taking that last point out of context, but I'm going to put it, this is the full context, the full paragraph, where basically they say in the report, well, we're going to try to play nice. We're going to try to encourage miners and crypto asset processors to comply with these really good standards that we'll lay out. We'll suggest it to people, but should these measures prove ineffective, the administration should explore executive actions, and Congress might consider legislation to limit or eliminate the use of high energy intensity consensus mechanisms. So, as much as they say, "Oh, well, we can, we can work with the industry, but if it doesn't happen, down comes the hammer." I think people that are fans of proof of work should take notice of this. So the problem that I have, this is just my personal belief, government doesn't always get things right. I think this was a meme from earlier this month where California banned gas cars out to 2030, but then they, in the same week, didn't have enough electricity and told people not to charge them. Now, that doesn't mean that they're not going to have enough capacity in the years to come. But right now, they don't. Right now, we can't switch to green today in 2022. It's coming, but we're not ready yet. But that doesn't mean they're not passing laws that tell people to do so, regardless of the consequences, is the key. Now, some people may wonder, why is it that in the UK, people's energy bills are higher than their rent? Well, there's a lot of different reasons. Energy prices are higher because of the Russian invasion of Ukraine, but that had a cataclysmic effect, a cascade. 31 smaller UK energy companies went bankrupt this year because the UK government imposed price controls on energy, and they couldn't turn a profit on these price controls. And so what happened was all these consumers got shifted over to larger suppliers, which I guess don't have that same price control, and prices went up. The government policy essentially created energy monopolies because all the small competitors were kicked out of the market. That is a government-created problem. Now, the fundamental factors sow the seed, but the unintended consequences of trying to make energy affordable created a situation where it was unaffordable. Germany, you may recall, has been trying to shut down its nuclear power plants. It started doing that many years ago after Fukushima. For some reason, that scared everyone into thinking that they were going to get meltdowns, and so they started shutting down the nuclear power plants. That's what they started doing. Well, now they're going to have to possibly burn coal this winter. So again, government doesn't always get things right. And that's what worries me about this report and the recommendations in it. It's very, very important to this administration and a large group of voters that climate change be the primary focus. They don't care about Bitcoin. They don't care about the efficiency, or the security of the Bitcoin network. They don't care. I've talked to people since 2015. I remember talking online with people about Bitcoin before it was a household name, and I was very taken aback. I was talking to some people on very far on the leftward side of the spectrum, and one of the prime things they brought up to me back then was, "Oh, it uses too much energy." This was in 2015. This was before it was today. So it's been a talking point of the climate change left for a very long time. It's been a target in the crosshairs, and this report really kind of centers in on proof of work. So I stole this from a friend of mine who gave this report, gave this presentation. Is the energy that is used by Bitcoin a feature or a bug? So he used the example of a Stradivarius violin. Now, Stradivarius violins were made in a particular time in history think it's the 1600s. But one of the theories for why they're so much more valuable is because, well, number one, they have superior craftsmanship, but also they were made with wood that was harvested from forest after a long period, many, many years of drought in Europe. And so what that meant was the rings of the trees were very, very compressed, more than at any other point in history. The lumber that was used to make these violins was unique. So all that energy, that sun's energy that created those trees, got compressed and put into make these very valuable pieces of music making hardware. Why is gold scarce? Well, it takes the explosion of a supernova to create gold. It takes a lot of energy being released to create gold. That's why there's not as much of it as there is hydrogen or helium or carbon or oxygen. It's taken a lot more energy to create gold. And what ends up happening is with Bitcoin, all this energy now and all the years it's been in existence has been pumped into creating the blockchain. To replicate the blockchain, you would have to start from scratch. You would have to put all that energy back into it to create the blockchain again. You can't. Every transaction that's been written before, every single confirmed block, that has taken energy, electrons, from whatever power source to write it into this ledger that cannot be replicated. So the Bitcoin blockchain itself represents a compressed, condensed store of used energy. And that's one of the things that gives it value. So that it uses a lot of energy is not necessarily a bad thing in itself. It actually creates the security of Bitcoin in that it can't be replicated, or because so much energy is going at any one time to running the network, it can't be attacked because all this energy has been used by the rest of the network. You'd have to come up with more than twice as much energy to attack it. So that's actually a feature that it uses so much, but it does use a lot. Yeah, that's exactly what I said there. So the report is not all doom and gloom. It does talk about ways that Bitcoin can be produced using renewables as well as some other uses. One of them is methane, like stranded methane, which is produced in the production of natural and use of natural gas. A lot of the times they will just flare, in other words, light on fire the methane that they don't need into the air when they're producing natural gas. That could be harnessed and used for crypto mining. They mentioned this in a report. And actually using methane for crypto mining would reduce the amount of greenhouse gas emissions, because methane itself is 27 to 30 times more the global warming potential of CO2. In other words, it blocks, methane traps more of the sun's energy when it's in the atmosphere than CO2 does. And so not having that methane and having the CO2 is actually better, okay? Crypto asset companies there are actually some I've heard of using some of this flared energy. It's free energy, and they're using this to mine Bitcoin. So there are companies that are doing this right now. But in the report, they also say, well, in a perfect world, at the end of this whole net zero quest, we're not going to allow any methane. So that's all going to be basically taken out. So even though this is a suggestion for now, eventually we're not going to allow methane to be used to produce Bitcoin in a net zero world. So don't really invest too much in it, basically is what it says. Now, they recommend building out infrastructure, constructing or contracting for new clean energy to power mining. So wind power, solar power, that can be used especially during off-peak hours. Like say you have a lot of wind at night. It was really interesting driving through Kansas. Just so many windmills I'd never seen before, but it's very windy. I'm glad they're doing that, producing energy from wind. But people in Kansas don't need that much energy. There's not that many people live in Kansas, trust me. People could be using that excess wind energy to mine Bitcoin. in that jurisdiction there. So that would be a good way to produce Bitcoin that wouldn't create more greenhouse gas emissions and use energy that was otherwise not going to be used. And they also recommend people building out new capacity. Like if you're going to build a factory that has its own clean energy production source, throw in some Bitcoin rigs to use that excess energy. And if you're not using them for Bitcoin, sell that back to the grid. So these are some recommendations they put in here that they're going to probably try to encourage people to do first, maybe with some tax incentives or I don't know what, but these are the good points, at least. There are a couple more points they talk about in the report. Environmental impacts on the air, water, and noise of production. Fans for cooling produce a lot of noise pollution. And they talk about the disproportionate adverse public health and environmental burdens for communities of color, indigenous communities, and low-income communities. Very important to the Biden administration. Computer waste disposal has always been a big problem, especially since I would say that Ethereum is no longer going to use proof of work. There's probably going to be a lot of graphics cards coming onto the market if you want to catch one. They won't be the best, but look for graphics cards to be a little bit cheaper now because you can't use them quite as much for Ethereum mining as people have been. And that's another reason Nvidia has been going down, as a matter of fact. Is because their bread and butter is selling video cards, and there's going to be a lot of used video cards coming onto the market pretty soon. That's not good for them to sell new ones, especially since that all these companies are not using their products to do proof of stake. Go back in history and look what was happening when Ethereum was going crazy in price and it was still using proof of work. That's why you couldn't buy video cards. But now, as these things become obsolete, they're going to have to throw them away. And there's a lot of lead and other materials in there that you're not really supposed to throw away. They've got a little sign on the package. If you looked, don't throw this in the trash. How many people listen to that? And they did talk about how blockchain can be used to do things like manage carbon credits and energy distribution grids. But that's really just to kind of say like, hey, we could use blockchain to maybe help with climate change. Maybe. Yeah. So here are my predictions. And these are just my off the cuff, what I think is going to happen based on what I've seen in history. Best case scenario, I think they're going to start requiring registration and licensing of mining facilities, proof of work mining facilities, if you're using a lot of electricity. That way they can approve people, reject people, and monitor what they are using. They may start to issue incentives and tax credits for mining operations that are clean. That would be a good thing. That would encourage people, subsidize the cost a little bit to move to cleaner production. But and they'll probably come up with some laws to regulate it as well. Just some general, there'll be laws. You can and can't do this. That's very likely what's going to happen. Worst case scenario, they just say proof of work is too energy intensive. You can't do it anymore. No more mining Bitcoin. That's worst case. I don't think that's going to happen next year. I don't think it's going to happen soon. But as a lot of people have said, my friend kind of gave me this phrase, banning Bitcoin mining for climate change is why they say they banned it, but that's not the reason. The reason is that it competes with the global banking system. So climate change, a lot easier for people to understand now that are already afraid of it. And Bitcoin, that's a big polluter. Got to get rid of that. And what that could end up doing is just offshoring Bitcoin and other proof of work mining operations to other countries where they don't have the same restrictions. The continent of Africa, for instance, has a lot of energy and very low restrictions, very low laws. India is another one as well. China, they completely banned it. And you saw what happened. The United States became 1/3 of Bitcoin mining once China banned it. So it was very effective in China to ban it. So it can happen. But they did it not because of climate change. They did it because it competes with their financial system. They make no bones about it. It was a threat to the Chinese Communist Party. So that is what I wanted people to be aware of when they're thinking about the future and all the news articles that may come out in the future about why we're doing this, climate change and how Bitcoin is affecting it, it's probably coming down the pipe. Once a decision is made that Bitcoin is going to be the enemy of net zero carbon emissions, expect to see the media machine kick in full gear to tell people how bad Bitcoin is. It's not happening now, but you'll remember that I told you about it. So I'm going to end it here. I've said what I wanted to say. Thank you all for joining me. Next week, FOMC, 2 p.m. Eastern, I believe will be, but I'll start the stream a little bit earlier. Join us on the Discord. We'll be live trading it there. So hope to see y'all soon. Have a great weekend.